let's talk about whether or not this OPEC plus possible 1 million barrel per day cut is going to do anything to get oil prices jump started to the upside.
Hi, Dom. Great to be here. Thanks for the invite. Well, there's a few things to bear in mind. The first one is that the cut, whether it's 1 million, 1.5, no one really knows so far. We're hearing 1 million barrels per day. We're hearing probably voluntary cuts from Saudi for another 500,000, but no one really knows. The decision will be taken tomorrow. One thing to bear in mind, though, is that whether those cuts are implemented, only part of those cuts will actually be delivered, because most of the OPEC Plus member countries are underproducing anyway. So the market is already pricing in part of that reduction, but we're probably not going to see the full reduction of the cuts in the coming months.
Let's talk about why, Jorge, they are even contemplating these cuts. I mean, we know prices are down. Is it because they could fall even further, given what's happening with the macroeconomy?
So I think it's that we shouldn't forget that prices were up to $130 per barrel early summer. They've declined massively. We're now at $84, $85 per barrel WTI. Now, there's big concerns about the economic growth globally. Inflation around the world is kicking in. Rising interest rates is also putting a hold on economic growth. So I think there's massive concern about how the demand of oil will perform in the next few months. And we see an oversupply market in the next few months. So downside pressure on prices. Therefore, if OPEC wants to limit that downside pressure, the only thing that they could do is start implementing cuts again for the first time since May 2020.
Since folks like you, Jorge, are paid, in essence, to predict what's going to happen or analyze what could happen, what's the thought? Where should U.S. benchmark WTI prices be? Where should Brent prices be, given the demand and supply assumptions that you have in your mind?
So far, what we think is that if nothing happens, prices Brent should average in the fourth quarter somewhere around low 80s. Low 90s. If there is a cut of more than 1 million barrels per day, then that cut should prompt prices to increase to around $95 per barrel in the fourth quarter. If the cut is even higher, with voluntary cuts from Saudi, let's say 1.5 million barrels per day, prices could spike to $100 per barrel at the end of the fourth quarter this year. So still to be decided. We've heard that the meeting is taking place tomorrow. There's a lot of negotiations going on at the moment. So we don't know, but that's the expectation of the market.